today we're going to unpack, I think, very important topic, especially for the Baltic startups, go-to-market, and especially go-to-market in certain times, right? And how you need to adapt your strategy, how you need to adapt your tactics while penetrating foreign markets. We're very lucky that all of speakers have different experience in different regions, in US and Europe mostly. And super, super excited to kick this off. Our discussion, to be honest, already started in a prep room. So let's continue. And I would like to start, with the short introductions. So maybe, Andrew, let's start from your side.
Hi, everyone. I'm Andrius, CEO and co-founder of Algori. We are a consumer analytics company that is reimagining the consumer panel. We have a 20-person team, post-seed, half in Lithuania, half in Spain. And we had the fun times of entering and penetrating a very monopolistic market this year.
Amazing.
Yeah. Hi, guys. My name is Tomas. I'm Chief Commercial Officer at Oxylabs. So for those who don't know, Oxylabs provide infrastructure solutions for public web data collection, and majority of our clients are based in the US, so probably that's why I'm here. Right?
Yep. Okay.
Hi, everyone. My name is Dalia Lašaitė. I'm a co-founder and CEO at CGTrader. CGTrader is the world's largest 3D model marketplace. We run the marketplace that provides stock 3D models for designers and other customers. And it's very popular. It has around 8 million users and really used by plenty of 3D designers. And then we have another business line that is called Modelry, and this is 3D content production for enterprises. So today I'm excited to share our experience in go-to-market for both of these business lines.
Thank you. So let's start from your experiences over the past year. We had a lot of different things happening in the market. The tech kind of bubble kind of bursted a bit. And Andrew, let's start from Europe, the closest region to us currently, and how you adapted your go-to-market specifically in Europe. And I know that you are working a lot in Spain. So it would be super interesting to hear a bit more.
So I think the European market is, the challenge with the European market is that it's not uniform, it's fragmented, right? And different countries have significant differences amongst each other. So Spain and Southern Europe is very different from maybe Nordics, the Netherlands, the UK. Spanish market is especially conservative, and it's actually the second startup where we're trying to build the first case study enter the market in Spain, and it's challenging. So the word adapt is probably the key word for us. We had to change everything. We had to change our business plan, our pricing, our approach, with the goal to basically cut complexity, cut sales times, cut the stack, to have less people doing more. We tried to be really innovative and close pre-sales agreements that even when you don't have the product, you sell it and you use that to fundraise and get money. In the US, our peer company was able to close 5 companies with 2.5 million euros in pre-sales that start on the first day after signing the contract. In Spain, we did the same thing, but it was 2 years, out of which 1 year of work is free, and the next year is only like 400K from 6 companies. So the scale is different. You have to adapt, but the key goal is to find stuff that you can sell now quicker. So instead of 6 months, how can you sell something in 3 months? And we changed our approach from building fancy SaaS interfaces to just basically giving the clients what they want in a PDF form, in a CSV form, in whatever form they want, just to enter the market and then go from maybe the first client being 10K to the second iteration of the same client being 100K, instead of the other way around, trying to sell the 100K from the first hire.
Wow, super interesting. And so let's jump to US. So Tomas, Oxylabs are, everybody knows, performing like crazy, right? You are acquiring American companies.
Yeah.
It's so bizarre to kind of think that Lithuanian company acquiring Silicon Valley company, right? So tell us a bit more about your year in US and what you guys changed.
Sure. I think we should firstly define what this turbulence is, right? And what type of turbulences we're facing, because in the last 3.5 years, we faced global pandemic, larger military conflict in Europe. So this period for me feels like a friendly swimming in the rainy weather rather than turbulent times. But it doesn't mean that there are some changes in some markets, right? And talking about the US side, we see that a lot of tech companies, especially those who were VC backed, are tightening belts and kind of saving. But at the same time, we don't see that enterprise deals are stopping. They're moving further. They're more kind of conscious and kind of slow down for a bit, like, oh, we don't want to make decision yet. But now it's kind of returning to normal. And at least on the enterprise side, we don't see too much of bigger changes. What we see that a lot of small companies are kind of leaving the market and going bankrupt, but it is what it is. But that's from the market side. From our side as Oxylabs, we were bootstrapped from the beginning, so we don't have that problem. So we use this as a unique opportunity to double down on investment, especially on sales, and doubling our sales both in Lithuania and in our key markets. So.
Amazing. And Dalia, we had the chance to work together as well. I know that you had a really, really big clients in US, and this is one of your focus like for years now. So what you saw, how CGTrader kind of dealt with all the turbulence?
Yeah, so CGTrader definitely had quite a turbulent year. So our two business lines are very different. The marketplace has an average order value of around $17, and it's mainly driven by organic traffic and user-generated content. And there, last year, we took the decision to exit the Russian market. And the Russian market didn't have much customers, but it had 20% of our content. So we pretty much deleted 20% of our content, and then that kind of resulted in a similar traffic drop. So for marketplace, it has been, the challenge has been to deal with that, and I'm happy that we finally rebuilt, and the traffic is back to pre-ban levels. On the other side, on the Moderator side, which is an enterprise targeting business, we had also quite a turbulent year in terms of the customer profiles. Our ideal customer initially was e-commerce companies and furniture companies. But as you know, there have been talks about recession. There have been changes in interest rates that impacts that market. So then we've been following it very closely, and then we moved more towards the technology companies to target that market as well. If you remember, there was quite a lot of metaverse hype, and everybody was trying to build different applications. So we went after that market. And now more recently, we are seeing more demand on the AI side. And of course, we are bringing up new business models that are related with AI. So it's been a lot of adjustments in the go-to-market.
Okay, thanks for sharing. And let's speak about more about the differences, how you're approaching those markets, right? So, for example, in Europe, Andrius, so when you're working with European companies, are you trying to get them through partners? Are you doing like very robust outbound? Are you more like leaning to the inbound side? Like how you're tactically, moving?
Assign resources.
Yeah.
So we are operating in the consumer goods vertical. So the key client groups that we have are consumer goods manufacturers like Coca-Cola, PepsiCo, Unilever, retailers, and then media agencies that work with the sector. So it's a niche vertical, right? So we do a combination. We started with outbound, and the key factor, I think, as in any country, if you are a tech company and you want to sell, you have to have the local sales force. So the deals that are the quickest in terms of timeline from high to money in the account are the deals where the sales rep has a personal relationship with the enterprise, has a previous history with them. Everything else takes a longer time to develop and build trust. Mm-hmm. So first of all, we invested in having local sales representation. We started with a lot of outbound, and at the same time kicking off inbound. In our niche, it's super easy because you don't need to spend, waste vanity marketing money to get featured in Fast Company or Fortune or 30 under 30 or all that bullshit. What you need to do is you need to focus on 2-3 key sources that in each European country, all the people in the sector read. So you can go to 1 or 2 clients and ask, where do you get your market knowledge from? Oh, I read this, I read this, I read that. do 3 ads, do some content marketing, and the inbound comes in. So now we have a healthy combination of outbound effort and inbound effort. But still, you know, the lead cycle, that's the challenge. How can you get something done in 3 months instead of 6? So it's always a combination of being flexible and being able to adapt to what the client needs. That might not necessarily scale in the long term, but at least it gets the revenue, you know, in the pocket, and it gives one the ability to maybe not rely so much on investor money, which is key for everyone now, because you need to survive for as long as possible without hoping or having to go and raise big rounds at the end of this year or even next year, I think.
Great. Okay, very interesting. And Dalia, Andrius started with retail. I know that you have some retail customers as well, but not only the retail, right? And I know that you have very interesting approach in US. You have partners. You know, how you are, you know, dealing with like more like a tactical, what kind of tactical moves you're making, you know, recently?
Yeah, so I think the way we could summarize it is pretty much kind of account-based selling, perhaps that would be the name. So we have a clear list of customers that would potentially benefit from the solution. They have to be large retailers, and then over time, they have to start investing into AR. They need to convert their products to 3D models, ideally in furniture space or similar. And so we kind of we're narrowing it down over time, but actually I think one approach that has also worked for us is having our technical team quite involved, because often the customers that take the decisions, they actually have also 3D designers or 3D experts that are kind of pushing these projects forward, so that has worked quite well. And then we have had some very successful, and currently have some very successful collaborations with US-based sales, where, you know, we just, I mean, not every time it works out, but we have some really great experience, and it has been extremely valuable when the person that you hire knows everyone inside out within your target group and can go have a coffee with this person and figure out what they thought about your pitch and about the meeting and so on. So it's really just the results that can be really very, very good.
Yeah. And Tomas, Oxylabs, right? I know that you have an outbound machine.
Yeah, we have some people.
Yeah, but can you tell a bit more? You know, maybe you're doing much more than outbound. Maybe do you have, you know, channel partners in the US, like how you're, you know, doing that?
I'll try to relate to maybe your original question on the market difference as well, because also majority of our kind of clients in US are in the retail e-commerce business. So most of our sales are direct sales, but we just recently started hiring people in US. So most of our sales were done from here, from Lithuania, so it's so-called inside sales. You know, and we're very happy that we have that talent to do that. But we needed a lot of people to build that motion. But when we were selling, because we were selling globally, and of course US works very well for us, but we were trying to sell into UK and other European areas, and especially for retail industry, we see very interesting differences. So retailers in the US are significantly more focused on the tech part and doing it internally, like building it, right? So building the solutions, while especially UK retailers are very dependent on consultants and third parties. And for those who are, you know, launching their own B2B businesses, thinking about these kind of larger traditional industries, always think about the value chains. So that particular area, is that done internally or is it done by third party? Is there a space for you to do that? Because we noticed that, you know, when we talk with UK retailers, they already want like 100% a solution, which works for them, right? So extremely customized. While US retailers say, well, we want to build it internally because this is, especially talking about data, this is a strategic area for us. So we don't want any third parties involved. We want to control that part. So those are sort of very kind of few differences we noticed when kind of playing in the same industry but different market.
Got it. And what about Central Europe? Do you target Central Europeans as well?
Yeah, Latin America, we have quite a few large clients there. But what's very interesting that it's a bit different selling methods, right? So again, we were able to do that from Lithuania. But what helped us is that we spent quite a lot of budget on going to our clients. So visiting them in Argentina, in other countries, and building that relationship. A lot of people think that you need to speak Spanish to sell. Yes, but you can without doing that. But if you want to build a long-term relationship, you need to have a Spanish speaker amongst your team or somewhere in order to kind of have a longer relationship rather than someone, just drinking coffee would decide to go with a different vendor.
Absolutely. Yeah. And what we recently kind of saw, with my company is that people really missed face-to-face time. And when you offer face-to-face meeting, oh yeah, of course, let's do that, because we haven't had that for a long time. Great. And what about budget? The most fun part for founders, especially. There's of course less VC money in the market. Everyone is really conscious about where they're spending their money. So, how you realigned your go-to-market budget and how the proportions changed? So maybe Andrew, from your side, you're kind of early.
I think it's more of a meta question. Like for the these are the OGs. They're the companies that are established quite a while ago and very successful, and they have the ability to have budgets, change budgets, and so on and so forth. If you're an early stage startup, I think we took a difficult route by deciding to start in Spain because of the network that we had, because of the experience, the market knowledge. And it's really a tough market to start. Now, in my second startup, I'm saying the same thing. Like, if you can start in Europe, probably start somewhere else than Spain, than Italy, than Portugal, because it's hard. We don't have the talent in Lithuania to be able to sell, for example, from Lithuania in Spain. There's not enough Spanish speakers. For English speakers, UK, US, yes. For Spain, no. So you need to get there, right? So, and that's a budget already. Like, you need to hire a person or partner, someone that's going to be your face there. The meta point, I think, is if you have the choice, start somewhere else, preferably the US, if you can. Now, for us now, because we've already committed and started in Spain, we're a very deep techie business. Like, we have to collect data for 2 years for it to have value, for trend comparisons and so on. So we committed. So now we said we're going to grow the sales team, we're going to grow the marketing budget, and then the market's crashed, and now the adjustment is that you have to do more with less. So we have the challenge of having to do sales, customer delivery, content marketing, and some product development with the same core people of 4 or 5 individuals. And the only way, I think, the only reason that works is that we're very aggressive with our ESOP. So as a post-seed state company, we have 14% of our cap table dedicated to ESOP, and all of these 5 core members, like, that's 2.5 times more than the European average, based on Index Ventures data. So the only way to collapse the stack and to really come together during these hard times and ask people to do more in terms of something not in their competence area, or to do more with zero budget or very limited budgets, is to be really sharing the upside from doing that. So we're a small team. We have the ability to make everyone an owner and share the responsibility. But in reality, the plan that we had at the point when we fundraised and the reality right now is very, very different. Because as someone that's not fully reliant on retained earnings, we need to expand our runway, which means making a lot of cuts and making the sale and go-to-market journey a lot more difficult for us. Yep. But at the same time, it's better to have the ability to have 6 or 12 very difficult months than one very easy month, and then, as our colleagues have said, a lot of small companies die. So at this point, is adapt and survive.
Yeah. The ESOP is actually interesting. Take kind of to save, kind of lock the talent, and I know Dalia launched last year. I'm not sure about Oxys, but I'm really happy that it actually starts to get a lot of companies in Lithuania start to do that. So that's a good one. And And let's
We
jump
have
to
the best regulation. We have the best
yeah.
regulation in the world, the Baltics, to reward employees with stock, and
Yeah.
hopefully we can do more education and make everyone a co-owner.
Yeah.
So that when success happens, as it already has for these companies, that trickles down to other startups, other companies, other
Yeah.
wannabe founders, maybe even.
Yeah, this is a shout out for Unicorn Lithuania. Actually, they did. I mean, tremendous job
yeah.
in the back end.
And the VC
and VC
association.
community. Yeah, teamwork makes dream works. Now let's jump to OGs. So, Toma, you had much more budget probably than the typical early stage startup. So, how the proportions changed?
Yeah.
There.
So as I mentioned, because of a lot of companies kind of tightening up, we're kind of double downing on investment. So those who divest, right? We actually invest more, and our goal is to actually double the budget and use that opportunity. Because we see a kind of increasing competition overall in the market. We see new players kind of entering the market, and we want to have that stronger position as we're kind of placed right now in a first spot. And there's new players coming in. At least there's, with us, I think 4 companies selling proxy infrastructure only in Lithuania. So it's like, in Latvia, there's 2 companies who sell T-shirts, right, printing T-shirts. So it seems like it's a Baltic thing. We don't go far away from what works. It's just kind of, copy-paste. And but if it works, it's good news. But in our case, our goal is to keep our momentum, keep the number 1 spot, and kind of protect that market share by doubling the investment.
Great. And Dalia, what about you?
Yeah, so in terms of budgeting, of course, I think, we went through a process where, of course, we did eliminate a lot of strategies that were maybe more kind of nice to have or experimental, focused on the core, what works and what, eliminate what doesn't. And then maybe another aspect that, I think after this year reflecting, worthwhile to take in mind, not only the level of your revenue you should think about, but also the variability. Because if you have a business line where it's like 1 month, it's like, 100K, another is 500, then it's 50K and so on. You have to also have a much kind of smaller team than if you have like a steady 100K or something like that. So this is, especially for the enterprise, it's remedied very much by long-term contracts, but the long-term contracts don't always work out in every market like in ours.
Mm-hmm. And like, how you would advise like early stage founder? What would be your main advices to them? Like while budgeting, trying to figure out where you should put more money, where you should put less money. Like, what is your main message like that you want to tell to the young founders? Everyone.
I know it's kind of like advice that I should be using or telling to myself, but in reality is I think it depends on the case, depends on the situation, how much revenue you're generating, what stage you're at, what runway you have. I think the key now is for everyone is to become as self-reliant as possible. Mm-hmm. But at the same time, you have to understand that in a startup, like if you cut all the experimentation and your pre-product market fit, maybe the whole exercise loses purpose, right? Because you're not going through the feedback loop, you're not learning, you're not getting closer to the product market fit. So I think it comes down to the fact that it's not going to be comfortable, it's going to be hard. You still need to do some iterations, some experimentation, but you need to really double down on what's core and not be able to cut. Not be able to stop, sorry, but you can cut what you can cut, and then you cannot cut everything, right? So something needs to be the main priority. Yeah. But it's definitely not the case that, at some point when the market is hot, joining a startup or starting a startup is almost a lifestyle decision. Yeah, now it's not a lifestyle decision. It's hard, and that's why the VCs and the investors are saying, "Oh, this is going to be a good vintage," because people are joining with the understanding that it's going to be a challenge. So if you're up for the challenge, do it, because you'll do it anyway. But if you're joining for a lifestyle decision, then maybe wait a few more years until the party comes back again.
That's for a fact. Yeah, and I heard some stories while working with startups that they, for some startups, the investors pushed them, burn the money, pour the money in. and it's very important to keep that resilience. Know that no, guys, like let's let's take it slowly. Let's wait for the better times, and then let's move faster. And maybe some key takeaways for founders like Tomas or from Dalia on your side.
Sure. I mean, I can give a tip maybe on go-to-market side, especially for those bootstrap businesses. Never skip on client relationship and client service or customer service. I mean, everyone knows that your product is not going to be as good as a large enterprise, but that relationship kind of even out the issues. And believe me, Oxylabs was underdog for many years, and we kind of were able to beat the market and beat our competitors by basically investing into relationship, into kind of trust in us that we can deliver, although our product lacked in functionality, in speed and other areas. And this is, I think, very important tip for those who are testing the waters.
Yeah, so from my side, I think what Andrius has said about product market fit, I think it's very important to understand where your startup is. Is it pre-product market fit, or is it kind of getting towards that direction, or is it if you have a strong product market fit? And the current times, they are a bit more maybe harder. The people are spending money with much more strings attached, that's not so easy. And when I think growth and product market fit solves a lot of these problems. When you don't have it, you will have all kinds of issues. Teams, they are unhappy, people get into conflicts and so on. But it's just everything becomes much kind of edgier in a way, but you need to understand that the fundamental problem is how you're doing, where is your product market fit, and if you can have the growth and try to solve those areas. And I think maybe the final note from my side that these times come and go. And maybe if it's your first startup, maybe it sounds scary, but we are all signing up here for this kind of roller coaster that is very interesting and rewarding. And so therefore, this is part of the business.
Well said. So thank you a lot for sharing, really insightful insights, and thanks for audience for listening. So I think I can wrap it up. Thank you very much.